So thanks everyone to joining this Web3 dialogue event at Cyberport today. I hope you guys got a good start in the Year of the Dragon. So maybe let me start first. I'm Kevin Law from Coindex Indexes. I'm the business development director over here. And then Coindex Indexes is one of the most leading crypto index provider by AUM since 2014. And then we are supporting institutions on like spot ETF, crypto funds, and other like exchange development over here in APAC and over the world as well. So maybe let me introduce our panelists over here, and then they will share something about their background and also their company itself as well. So maybe Nick, you start first.
First of all, thanks Cyberport and Coindex for the invitation. So my name is Nick. I'm the co-founder of Autonomous. So Autonomous is a technology-powered investment platform specializing in digital asset. So for us, we take a systematic approach in our investment process. So we are formed by a team of seasoned portfolio managers, quantitative scientists, and engineers. So we started in late 2020. So we've been trading active managed strategies in the digital asset ecosystem.
Great, thank you. So I'll also echo the thanks for the invite to both Cyberport and CoinDesk. My name is Donald Day. I'm CEO of VDX. We're building a licensed and regulated trading platform focusing exclusively on the institutional market, mostly intermediaries. So the classical exchange model where broker-dealers and banks onboard to the exchange and then end users onboard to these intermediaries. My background, I previously worked at the SFC, mostly focusing on digital assets. So I co-wrote those terms and conditions and licensing requirements that I now need to answer and adhere to. Before that, I co-founded one of the first institutional-grade cryptocurrency hedge funds. I was a sell-side and buy-side quant strategist and trader. And I started my career as a consultant building exchange trading systems. And thank you for coming today.
Me too. Thank you so much to Cyberport as well as CoinDesk for inviting me to speak in this wonderful panel discussion. I am from K&L Gage. I don't know how many people may be familiar with Gage, but our firm is one of the largest law firms in the world, and it was built by Bill Gates' father, Bill Gates Sr. So we quite emphasize on technology areas, and my practice area involves virtual assets and other technology areas as well. I'm helping licensed exchanges and also funds and other companies, crypto companies, on tokenization and licensing issues and some other virtual asset issues as well. Thank you so much for joining us.
Okay, so let's get started. So right now, since like the US spot ETF has been launched for maybe 1.5 months already. So how much have you seen the launch of like the US spot ETF contributed to the institutional adoption and also the conversions of like the TradFi and Web3 area? So what have you seen like for the changes in terms of like the Bitcoin price movement, like for example the liquidity flow, and like market demand, and so others like the structural development, and for example also with the market participation? Maybe Nick, you can start first.
So from our observation, and we've looked at the historical analysis, so previously, so I worked in traditional finance, so I traded different asset classes. So if you look at Bitcoin as an asset class, it has been the best performing asset class over the past decade. If we compare to equity, compared to fixed income and commodity. So what we see is I think last month the US SEC approved the 11 spot ETFs. We see that as a milestone to recognize digital asset as a new investable asset class. And if we look at in terms of the current fund flow, so in the past 2 weeks, on average, daily, there's been about 350 million US dollars into these 11 ETF. In terms of the supply side, if you look at the supply dynamic, the Bitcoin network produced 900 Bitcoin per day, right? So at today's price, that's about 47 million US Bitcoin added into the system. So we're seeing a demand versus a supply imbalance of about seven times, right? In the so I think it's very successful. And second, if you look at the cumulative asset under management, so in total, I think the Bitcoin spot ETF is about 38 billion US dollars. So that's now ranked second in terms of surpassing silver as a second largest commodity ETF, right? And plus all the different positive narratives that's flowing through it. So we're seeing a lot of new innovative products going to be built around it. So I think following through that, we're seeing that there's talks of the Ethereum spot ETF, and then also other structured product that's going to be built around the Bitcoin spot ETF. So I think it's a very successful launch.
All right, thank you. Interesting.
Yeah.
So initially, the launch was a bit of a non-event. Prices didn't do anything, even were quite soft. Of course, since then, prices have firmed up. Bitcoin is currently hovering at about just under 52,000. BlackRock is now one of the largest holders of Bitcoin. So we need to carefully examine what that means and cut a bit through the hype and inaccuracies. Of course, the immediate effect is that retail investors can allocate money much more easily into this asset class. Before, they needed to onboard to a trading platform. They needed to do their due diligence on that platform. They might not have been very sure what the insurance protection is, whether there's a fair, orderly market, and so on and so forth. They also might have to worry about private keys, cryptography, and not every retail investor is really keen and able to do that. And now what they can do is they can invest through the traditional broker. They don't need to worry about custody. They don't need to worry about counterparties. Additionally, and not to be underestimated, someone like BlackRock is not going to stake or risk their reputation that they've built in a lot of other asset classes on what is a comparatively small part of their business. And I fully agree with you what you said about the numbers, but let's not forget that the volumes and the revenues in crypto are dwarfed by the revenues and volumes in traditional finance. So for retail, it's absolutely become more straightforward. But what about institutional? Because you asked about institutional adoption. So of course, institutional investors invest quite differently than retail investors, right? So of course, they'll be interested in renowned issuers bringing their experience, their organization, their balance sheet into this. This is great. They have other considerations. So as an institutional investor, I need to have liquidity to answer to redemption requests unless I'm gated. I need to have access to independent valuation for daily shadow NAV or monthly NAV. I have accountability to auditors, banks, insurance companies, regulators, and so forth. And I'm bound by the mandates in my PPM. So an institutional investor also usually, not always, but usually deals in quite different sizes. So when I worked at a hedge fund, we would usually deal 1 to 5 million US per clip, sometimes much bigger. And like you, I also analyzed some numbers. So the average daily volume of EBIT, which is the BlackRock ETF, is 17.5 million per day, and that's about round about half a billion US. That's okay, but Apple's ADV is 9.5 billion. The Spider, which is an ETF that tracks the S&P, sits at 38 billion per day. And of course, the FX markets are at 7.5 trillion. So, and institutional investors, because of their size and because of how they invest, they really like, usually, traditionally, unless they're fully electronic, they like a high-touch sales approach. They like to talk to people. They like a white glove approach. So, it's absolutely a milestone. It's absolutely important that someone like BlackRock and others are getting into this. It's a stamp of approval. It helps retail. Whether it helps institutional investors, we'll need to see. But it's definitely a big, big step ahead. And I think everybody in the industry, especially people like us who really want to be regulated, licensed, and above board, it's a really important part.
Thank you all. As a final speaker, they have already covered what I want to say. However, maybe I can try to share a different angle as a lawyer. We are more conservative as our profession. So, but I guess in overall, I share the same views that you given by Donald and also Nick. But if you also looking at the institutional angle, I am more positive than what Donald said. I'm sure that institutions are more willing to get involved in this industry going forward. Because I mean, I'm talking to conventional FIs, whichever with my clients, and then previously, as a sort of a joke, when I talk to them about possibility of Web3 and crypto, they were a little bit willing to discuss topics in details. But now, because of ETF approvals on SPAs by SEC, and also it's not one, right? 11 of them. And then as you discussed, the number, sort of all the energy and also interest that they are getting from the public is huge in the US. So now institutions are more willing to look into the market, and also I see some other big names such as CD, UBS are already trying to support their clients to trade into ETFs, which are being moved if we would try to compare now against maybe 2 or 3 years ago. So I think it's a big energy, and also as Don briefly mentioned, I think it's a significance of this ETF approval is sort of giving legitimacy to Bitcoin by the regulator, who has been chasing after FTX or other big names, but they eventually approved it. So it gives a lot of motivation and legitimacy to institutions who are trying to come over to join the crypto industry. And also another angle that I can see is maybe Bitcoin is only a starting point. Maybe as you understand, Ethereum ETF, spot ETFs are also now in application to SEC. There may be some other products to be submitted to SEC as well. That's only US. Maybe even now, Hong Kong is considering accepting applications, so some other countries may follow the same suit as well. So I'm quite positive on this impact. Thank you.
Yeah, Jay, you're not the last one. I'm the last one for this. So yeah, I just added a few on top of yours. So I think the market is also trying to diversify with the institutional going in with the Bitcoin. So now it seems to be like everyone is looking to the Ethereum. So that's why we see the Ethereum is now breaking like the 3100 this day on Asian hours. So I think, and also we are as the index provider, actually Connect Indices is also in talk with some institutions. Some of them are actually looking to have more dynamic product, like for example, having some quant signal, making use of the legacy of the market making in the traditional world to see what they can actually differentiate from the just spot ETF that everyone is doing. So I think more and more products will be coming up, and also more sophisticated strategy will be coming up to meet the needs of the clients. Yeah. So maybe moving on. So as just mentioned that like Hong Kong is also SFC also open for the acceptance of the latest spot ETF, including the Bitcoin and Ethereum ETF to be submitted. So what do you see from the launch of the Hong Kong spot ETF that might change the market dynamics and also the kind of the trend paradigm in the Asian house? Maybe I can start first. So we see that as I just mentioned, that Ethereum seems to be picking up for the market attention. So we see that actually Asians is also playing a more important roles in terms of the pricing powers. So we see that sometimes the Bitcoin and also Ethereum is actually breaking higher time in the Asian time zone. And for example, Connect Indices, we calculate all these Bitcoin and Ethereum prices per every second, so we can keeping track on that kind of things to fit more better needs of the Asian hours or the Hong Kong trading hours. So we see might be there would be more needs and also more demand for the Bitcoin or Ethereum ETF or some other structured product to be launched in Asian time zone, and that might also be changing the market momentum of the two majors over the road. Yeah, maybe Nick, you can continue.
Yeah, so my view, yeah, I agree with Kevin. So so we look at some of the seasonality analysis in terms of sort of in terms of trading hours by the region, like so Asia, Europe, and US, and then so it's quite interesting that so it's from a volume point of view, I think so around USL it dominates Bitcoin volume at the moment. But in terms of the price action, it's as Kevin mentioned that you tend to see that sort of buy the Asia hour and kind of sell the US hour to kind of anticipate the US ETF flow. So that's quite an interesting sort of phenomenon that we've been seeing in terms of intraday trading. And apart from that, I think like so following the success of US spot ETFs, so it's really good to see and excited to see that some of the very reputable Hong Kong asset managers is being the first batch to launch the the spot ETFs in Hong Kong, right? So these are like Harvard's SOP, Value Partner and so forth. So yeah, so I'm very excited to to see that more sort of pricing and more volume sort of percentage and dominance based out of Asia trading hours.
Yeah, exactly. That's my main point as well, and that's trust. So depending what kind of trading style someone has, so usually your average, especially at least retail investor in Asia, wouldn't necessarily be an intraday trader going in and out every day. And most Asian retail traders have access through their brokers to US and European stock markets, so they can actually trade the current spot Bitcoin ETFs in the US in US trading hours, especially if they want to get exposure, go in, but not go in and out constantly within the day. But surely it would help if there were such ETFs available in Asian trading hours. It would be more convenient. And the main part is trust, because if trusted intermediaries, Asian intermediaries, issue these, it strengthens the market in Hong Kong. It shows how, I talk about Hong Kong, Asia in general, Hong Kong specifically, it shows that the regulators further approve other products in the space, and that's all the right way we should be going.
I guess as the only lawyer here, trying to give you more perspectives on the regulation side. I mean, on the market side, I tend to agree with what Dan said, in the sense that we have 11 spot Bitcoin ETFs available in the US already, and then they have a bigger market than, for example, Hong Kong, maybe other countries in Asia. So even if it's a good news that SFOC said that they are willing to consider if the application is submitted to SFOC. However, how much demand we may expect to see in the coming month once we get the approval, I don't know, because I think it's yet to see. However, on the regulation side, one sort of distinguishing points that, some of the distinguishing points that I try to talk to my clients on the differences between what we have in Hong Kong vis-a-vis US is, if you look at the announcement of SFOC, SFOC said that they could consider applications on virtual assets. As you understand, the definition of virtual assets are quite broad. It's not just Bitcoin. It may cover ETF and others as well. However, in Hong Kong, unlike US, we have licensed exchanges, which are 2 now. And then whenever SFOC tries to come up with, typically they try to make a frame where they encourage players to work with the licensed exchanges. So if we look at the circular, actually the whatever virtual assets you can try to make to make this ETF is limited to whatever tokens, coins are listed in exchanges. So if you look at what tokens are available in, for example, HashKey or OSL, then you can try to come up with the ETFs based on those tokens. So I think that's the difference, big difference between what we have now and also US. Thank you.
Yeah. Okay. So yeah, I think you make Jay, you make a very good point on the next towards the next question. So actually, like Hong Kong is said to be one of the most aggressive jurisdiction for the Web3 environment. Like we have the policy on or consultation on the spot ETF, crypto funds, e-Hong Kong dollars, stable coins. Of course, the VATP and also other sandbox initiative as well. So maybe for this question, I will reverse the flow to Jay first. So so like for example, in terms of all these initiatives, do you see that Hong Kong? To what extent do you agree that like Hong Kong is sort of like more crypto friendly, but somehow not crypto easy? Like in terms of like regulation perspective.
Are they sort of conflicting to each other? I don't know whether I can say crypto friendly, but I think I would say crypto supportive, Web3 ecosystem supportive. I have been looking at what the regulators have been doing, and then also what market have been doing for years, and then I guess every year we have more rules coming in and more ordinance coming in and also more circulars coming in. So it's not easy to figure out what you need to comply with. But typically I look at the segments on what Hong Kong government has been doing. And then, so if we look at this, there are different segments, exchange, stable coin, also tokenization, intermediaries, funds, and all others. Hong Kong government, as far as I can see, has been covering all those things. Even now, they are trying, I think HKMA announced guidance on the banks on how they can do custody business of virtual assets as well. And also they are looking into sort of regime on covering OTC channels as well. So if you look at all these different segments and then the government's efforts to try to give clarity on what they need to do, what they need to comply with, I think government has been doing quite more proactively than other countries. For example, I mean, good example that many people are trying to compare to is EU. They have a MiCA. However, since MiCA has been enacted, nothing has been happening there yet. And the UK is trying to follow it, but nothing in substance has been happening. So in the sense, as a lawyer's view, in my personal view, Hong Kong has been quite proactive on trying to give clear regulations to the industries and also trying to move things quickly as well. Thank you.
Maybe Don?
Thank you. And this is one of the questions I'm most passionate about, actually. So thank you for that.
Go ahead.
And I completely agree with everything you said. So Hong Kong certainly is the global leader when it comes to comprehensive, reliable, and robust digital asset regulation, especially for institutional investors. I'm happy to have that argument with anybody who disagrees with that. Like you said, positive attitude of the government, regulators working together. There were a roundtable at the beginning of last year to address certain roadblocks that licensed entities faced. And regulators working together to address those challenges isn't something you see in every country. The framework launch was about 2019, the regulatory framework for virtual asset trading platforms, and it's been further refined and finessed. And as you said, friendly, back then there was a lot of pushback. The pushback did not come from people in traditional finance, that came from people exclusively in crypto. They often said this is too onerous, too complex, we go to crypto-friendly places. Well, those were the jurisdictions where the unfortunate events of bankruptcies and blow-ups happened. And Hong Kong really has established itself as a high-quality place to do crypto and do it well. It has also, thanks to that framework, attracted a great number of really high quality company and professionals who have come to Hong Kong for the specific reason that this framework exists, which is one that people know from traditional finance and they know they can trust it. So I think Hong Kong really is far ahead of other financial centers when it comes to digital asset regulation. There's obviously a lot more when it comes to a capital market or a deep capital market, and that includes a whole value chain of financial services, more than just trading platforms and fund managers. It includes market data providers, it includes lawyers, it includes compliance advisors, custodians, and so on and so forth. And that's something we really need to work on, but people are working on that. Just as a side note, they're really, when I said about professionals being in the market, they're really also engaging a lot and working in their spare time. As an example, I'm co-founder of CIFA, which is a non-for-profit organization mostly consisting of lawyers focused on crypto fraud and asset recovery. This is nothing that crypto media reports on. This is nothing that crypto bros or evangelists would have on their radar screen, but it's incredibly important, and banks, fund managers, intermediaries, and regulators are very, very keen to see what to do when fraud happens, because sadly, it's not a question of if, but when. And professionals know this. Banks have whole departments focused on fraud. So initiatives like this are really, really important and help create this ecosystem and market in Hong Kong. Hong Kong really has a very rigorous approach to licensing. It really means something to have successfully achieved a license in Hong Kong. And indeed, a lot of entities have left Hong Kong and set up shop in other jurisdictions to easier obtain a license. I don't want to comment on them, but I think it's quite good that they're not in Hong Kong anymore.
I'm just going to quickly add, I guess, so most of my responses is very similar to Jay and Donald. I think, being in Hong Kong for 12 years, so seeing how the crypto industry grew in this city. So Hong Kong always was the home for a lot of sort of global crypto, big projects. As I mentioned, so previously, I think the regulatory framework wasn't as clear. So some of these players, they went to, other jurisdictions and so on. But I think it's good that recently, in post 2019, that there's clarity in terms of framework, in terms of what a crypto startup or what a crypto operator should follow in Hong Kong. And I mean, in terms of like the headlines that we're seeing, as you mentioned previously, I think it's been very active in addressing a lot of different areas. For example, the Hong Kong MA backed sort of stablecoin. I think that's it's really exciting to see that, because we view that as like the backbone for a sustainable, healthy digital asset ecosystem.
So as a crypto index provider, I think we also see the benefits and also the positive momentum about like the Hong Kong regulators going into different initiatives that actually will be having some roles for a benchmark to participate. Like for example, like the virtual asset trading platform license, the virtual funds. So we are working together with all our panelists over here, and also some others. Key players in the city as in the region as well. And for CoinDesk itself, we are also dedicating more resources in APAC with Hong Kong as one of the regional hub. So you will see more excitement coming out as well. So maybe next question is about like for the project itself. So when we see that in terms of the Hong Kong regulated framework, so how do you see that all these will be benefiting your projects? And what kind of like key challenges, despite the positive momentum, what kind of key challenges that you are facing most, and what will maybe some sort of like the remedies or solution on that? Yeah, maybe Nick, you can start first.
So Autonomous this year, so we were actively working on Hong Kong regulated digital asset fund product. So the idea behind that is we want to offer a diversified and a liquid investment solution, that a long bias solution that investor can invest into to solve the asset allocation problem. And given the clear sort of guidance that we've been received from the regulators and so on in terms of a regulated fund product in Hong Kong, which currently it's it's spot only, which means that it has to be a long only product. There was very clear in terms of the exchange venue that we can use, and very clear in terms of the investable token universe and the instruments, and also some of the preferred sort of service providers as well. So I think for us, I think that's it's really beneficial that there's clear sort of guidance around how we can construct our investment strategies and how we can set our risk parameters to fit within the regulated sort of fund product in Hong Kong.
We see this licensing framework in Hong Kong as a competitive advantage and as an enabler. For us, a framework on the same business, same risk, same rules, comparative to other asset class, really sets Hong Kong apart. No other jurisdiction in the world has anything comparable. We at VDX, we focus on the institutional market in Hong Kong. Like I said, we focus on intermediaries, on banks. This is the traditional exchange model. And our team is very familiar with this model, and also our partners are very familiar with this model. So we welcome the opportunities. Actually, the framework does offer a lot of opportunities that a lot of people don't look at. As to challenges, the licensing journey is much longer, more complex, and much more in-depth and detailed than any other license. We are a startup. So our team is too small. I have about 3 different jobs, getting paid for one only, unfortunately. And a lot of open to-dos, we all do. But that's just part and parcel for a startup. Some of the challenges I thought about when you gave us the questions is there's a lot of noise in the market. There's some participants spreading rumors. There's some consultants saying they can guarantee the license, they can offer shortcuts. There are applicants who know that they will get the license in 3, 6, 9, take your pick months. There's others who have connections and know what the regulator is going to say and announce in a month or in 2 months. None of that is based on fact, to say it very politely. Another one is to remain focused. So I just said that there's a great number of opportunities. A lot of these are not in areas where most people look at. And we're quite comfortable in identifying and executing on those opportunities. The challenge is to remain focused and to build excellence in a core set of offerings rather than do too much.
Thank you. Kevin, I guess for us, actually, we are not a exchange or a fund, so we do all different things. For example, which are affected by this framework that we have in Hong Kong. So many different projects, for example, for exchanges, licensed ones. We work on tokenization of new asset classes, equity, debt, to be tokenized, and then trying to list those tokens on the exchanges. But as you understand, it's new, so a lot of regulatory research need to be done, and then we need to try to structure tokenization in the proper way. Also, we do, for example, draft opinions on the tokens, for example, XRP and then USDT, USDC. When they need to be listed, then as you understand, on exchange needs to do their own due diligence on the tokens, and we give them sort of legal due diligence on the tokens as well. And then if we actually try to do it, there are many private materials that you can refer to. However, actually, if you look at the white paper and official materials given by, for example, Tether or others, not much. So we need to look into official papers given by the issuers of tokens, but also look at some other private research papers as well. Try to make sort of well-made opinions on those tokens as well. But also we do help clients do how they can set up virtual asset funds to invest into virtual assets, but also try to see how they can tokenize SFOC authorized funds as well. So different angles are affecting our projects. For the challenges, many things are new. As Nan said, the licensing framework of exchanges came into effect only last year, June 1st. And then actually about OSL Hashkey, I recall that they were allowed to do retail trading only, I think in August. So we have about a half year passed. So a lot of things are still new, and then we still try to look into regulations and also other markets as well as to how we can properly document the structures, but also document the transactions as well. So I think those are not easy to handle, but also challenging, but also rewarding as well.
Yeah, I agree with you. So because as you mentioned that like the VATP only gets started to offer the trading on the Bitcoin, Ethereum, and for like connect indexes, we actually tracking against like 500, which is there is only 2 over there. So it's kind of like longer time that we will see like we're working with some like funds, VATP to support the token listing and also others like the fund development. So that might be some more ways to or longer way to go to enhance the awareness and also investor education on how to understand the different tokenomics and about like the how to structure the like more regulated product to go on to protect the investor interest and also to protect the market integrity as well. So yeah, this is quite a lot of challenges going ahead, but still rewarding and promising in the long run. Yeah. So maybe moving on for like for the next question, like for example, like in terms of all these like hurdles or like some sort of like the challenge that you see, what would you make you suggest, like for example the regulator to optimize some sort of like the trading or operation efficiency, while at the same time that to maintain the highest standard of like the AML and also KYC procedure to maintain the market integrity? Maybe Jay, you can start first.
I mean, I think that's the least point that I may have some insights, but
Yeah.
I guess we talk to different clients, clients from US, clients from Korea, clients from China and others as well. One of the things they try to highlight to me, and then I think it was in one of the comments given to SFOC as well last year when they tried to come up with this license regime for VATP, allowance of derivatives trading on the virtual assets. It's something that people want to see, but I know that SFOC was aware of it, and then they are looking into it, and then I don't know how long it may take, but it's just something that some of the clients were also looking forward to. I think that's it on my side for this topic.
Couldn't have said something else because you took my point away. Obviously, we've seen a step-by-step evolution of the regulatory framework since it was launched. If there's one thing on my wish list, it is actually derivatives trading for some very simple reasons. If I talk to Nick here, if I approached him and said, I would like you to onboard with us, one thing I really want to offer him is the same ability to do risk management as he can in all other asset classes. And that requires Delta 1 derivatives, futures, swaps, forwards, and higher delta products like options and structured products. Whenever I talk about this, I need to caveat that we're obviously not talking about the rather ridiculous 50 or 100 times leverage that is offered by some rather disreputable trading platforms, including one not too far away from here. I worked with one of the most successful Asian hedge funds in traditional finance. The maximum leverage they would ever use is 6 times in exceptional circumstances. On average, never more than 2 to 3. So that's sort of like the approach I would take, is purely risk management. One would like to offer borrow lending, margin, leverage, derivatives as a bread and butter work of a prime brokerage desk to help institutional investors to risk manage their exposure?
Yes, so I just want to add, in terms of, so one milestone that we're looking for is the clearer sort of regulation in terms of launching like a derivative products, like Donald mentioned. From an asset manager point of view, I think it's having a derivative product can really help us build more sets of strategy, like long short strategies, and also can help us risk management in terms of like some of the tail risk, given that crypto is a very volatile asset class. Yeah.
So in terms of like the emergence of like the market volatility, so everyone knows that like the Bitcoin halving is coming ahead, and then what do you see that if the market itself has already got prepared for to have some sufficient tools to manage the market volatility, and what do you expect from like from some of the opportunities that you can like capitalizing on like maybe for ourselves, like Condex Index has actually got a big contract indicator and some signal as well. So some like, for example, like institution and hedge funds can actually make use of them to mitigate or but have a better or more subjective, more objective understanding about like the if the Bitcoin is actually on a good trend or actually in a kind of like just do a fluctuation. And we actually see that the trend it has been quite appropriate to keep track it when the market is trying to do some sort of like market mutual strategy around. Maybe Nick, when you see the Bitcoin halving will be one of the topic of this year, how would your project or maybe your trading strategy to manage the volatility around?
Yeah, so for us, I think we are monitoring 3 big events this year. So I think Bitcoin halving is one of the major one. The reason being is so Bitcoin has a 4-year cycle, and then we did analysis over the past 3 cycles that typically if you were to buy at the Bitcoin halving day, and if you can time it perfectly to sell on the peak of that cycle, over the past 3 cycles, on average you will make 36 times return, right, as a Bitcoin investor. So that's actually quite significant profit or opportunities for Bitcoin investors. And what's interesting about, I think, this Bitcoin halving is that right now Bitcoin annual supply is about 1.6%. So post April halving, that annual supply will reduce to 0.8%, right? And on the demand side, we have new inflow from the spot ETFs and so on. But in comparison, say post-halving for the Bitcoin annual supply of 0.8%, now that will be actually less annual supply than gold, right? So hence, I think on the supply side, it's getting less and less in the circulating supply. And the 2 other sort of factors that we are focusing on for this year is continue to look at the fund inflow from the Bitcoin ETFs and later, the Ethereum ETFs and potentially other index products that's going to be launched in this year. So that will drive inflow from retail and potentially on sort of traditional space, which we view is underallocated into this asset class. Right? And then in terms of the third factor that we see is that after the past few years of rapid interest rate hike by the US Fed, right? So we're finally entering into a rate cut cycle this year. So I mean, obviously it's not going to be in May, possibly now it's not going to be in April, March, but it's potentially going to be in May and June. Right? So I think that tends to be quite positive for risk assets and so on like that. So how we're positioning to capture these opportunities is that we adopt a long bias sort of active managed strategy that give the investor a really balanced sort of exposure to the ecosystem, but we use systematic models to rebalance so that one of the key metrics is to reduce sort of downside volatility, right? As I mentioned previously, I think Bitcoin being such a volatile asset, risk management on the downside is something that we focus on while giving the upside exposure.
As an exchange or trading platform, we don't have a view. But as a former trader and fund manager. I've always been fascinated by Bitcoin halving and the correct assumption that it leads to an upwards movement, which I personally don't understand. So when you say rate cuts and fund inflows, that I get because that's uncertain and unknown as of yet. But the Bitcoin halving is perfectly known. You know exactly which block it's going to happen and roughly what time, roughly. And when I compare that to, let's say, a dividend announcement in a stock or corporate action in a stock, that's immediately priced in. But in Bitcoin, it's not. So for me, that's still a sign that the asset class, although it has come a long way, is still less mature than other asset classes. And what does that mean? There's still a lot of opportunity to make money.
Thanks, Dan. Maybe I may be least qualified to comment on this one because I'm not a trader. I'm not working in a virtual asset trading platform either. So maybe as a layman's perspectives, I've been watching the news and then a lot of stories and news about how much Bitcoin halving may have on the Bitcoin itself and also other coins and industry itself. But I don't know whether it will be really that much volatile because I looked at how Bitcoin moved before ETF approval and after ETF approval. But in many news said that it's buy the rumor, sell the news. So actually it happened, right? So before ETF approval, price went up, and then after the approval of ETFs, then price went down. But actually they recovered. So maybe as a layman's perspective, so maybe it may same thing happen. There may be some volatility, but how much volatility there will be is something that we need to see, but may not be volatile. But looking at the Bitcoin and other coins and industry as a lawyer, maybe in my view, maybe Ethereum spot ETF approval may have a bigger impact on the market itself than Bitcoin halving, in the sense that the chairman of SEC was not really, how can I say, pushing hard on the Bitcoin, because Bitcoin has been known as a sort of a virtual commodities for by many experts. But Ethereum was not something that he was not sure about. And then there are many different arguments on whether or not they should be treated as securities or not. So, and also the chairman said that Bitcoin is a virtual commodity. I mean, that's not what he said, but so we gave approval on one virtual commodity, but it does not mean that they may give approvals on others. So it may have bigger impact if the spot Ethereum ETFs are approved, because they have more implications on other coins as well, Solana and others as well. So that's how my layman's perspectives work. Thank you.
Okay, thank you. So maybe in the interest of time, that we'll have the last question right now. So maybe this question is about what do you expect from the Hong Kong or maybe the APAC crypto landscape in the year of the dragon? And what will you share? Maybe share your best wishes or some sort of the business plan in the last 30 seconds to wrap up. So maybe I can start first. So when Jay, you mentioned that Bitcoin and Ethereum, and maybe possibly that some institutions are looking to search for what next. So as Connect Indexes, we are now seeing some sort of more interest in terms of Ethereum staking. Everyone see that maybe sort of the native Web3 yield. So we are launching some sort of the Ethereum staking rate for the relevant fund product around. And also we are also trying to launch a diversified portfolio index, which is called Context 20, which will be like a crypto QQQ, so that for some institutional investor or high level individual, they can trade on that one and then just not to kind of like lose some of their momentum, but they can enjoy some of the kind of like the growth pipeline if one of or maybe two tokens kind of like suddenly ramp up, so they can have this like Context 20 to better express the market view and also keep track against the market momentum. So we see there might be more private funds and also like some more diversified product portfolio coming up to across APAC and also across the globe to meet the sophisticated demand from the end client. Yeah, maybe Nick.
This year, I think we're very excited to to be looking forward to some of the sort of upcoming milestones in Hong Kong. So these are namely the Hong Kong MA regulated stablecoin, continue tokenization of real world asset, the sort of framework that's going to come out for the virtual asset OTC dealing as well. So all these things I think is we are really looking forward to for Hong Kong to be as a top crypto sort of global crypto hub, right? So at Autonomous, I think previously mentioned that I think the macro environment we see as very active for digital asset this year. So it aligns quite well with the EL Dragon, and so we're very constructive in terms of the digital asset market. So what we're focusing on is launching investment solution that's suited to help to access the opportunities in this ecosystem.
We're certainly very eager and very positive about this year. We're very happy to continue being a bridge and building that bridge between traditional finance and digital assets. And the Dragon is renowned to resemble power, strength, vigor, and charm. So we're absolutely convinced that there will be strong developments in the digital asset space. Hong Kong will remain and establish itself as the most powerful digital asset center in the world. And like you mentioned, the consultation on the OTC shops and bringing them under the umbrella, that will help ensure that the digital asset market in Hong Kong remains vigorous. And when I look at the panel here today, I'm absolutely certain that Hong Kong will continue to have the most charming professionals in the world.
Looking at me, and then you feel that. Thank you, Donald. In my view, I think many things may be happening this year on different areas. Why? If we look back 2 years ago, up to there we had only 2 exchanges, OSL and HashKey. And then looking back last year, what has been happening in Hong Kong was to try to build up some regulatory frameworks on different areas, VATPs, but also tokenization and also tokenized securities, virtual assets funds and others. Now, to me, we have a good foundation of those clearer regulations based upon which we can try to make new products and then also do some other listings as well. So, for example, listing of new tokens, I think it will happen in the licensed exchanges as well this year. But also, for now, we have only 2 licensed exchanges, but we have about 17 licensed applicants. Maybe a few of them may be able to get the licenses from SFC this year. Then you have more licensed exchanges this year. But also, there will be tokenized securities issued by some issuers, and maybe they may be listed on exchanges as well. And also, I know that there are some asset managers who are working on the virtual asset ETFs as well. So we may see some virtual ETFs approved by SFC, but also there may be some tokenization of SFC authorized funds as well. So there may be many things that may happen in different areas. And also, not to the least, stable coins. I mean, they need to go through a LegCo to make a new ordinance, but it may take some time. But who knows, maybe this year we may have a new Hong Kong dollar-based stable coin by some issuer this year too. So I hope that we can expect to see a lot of many things in many different areas. Thank you. Maybe you want to say something.
I like Dawn about how the Dragon is for the vibe and also for the energy that coming over. So I guess we will see some good coming up with like the spot ETF, VATP, tokenization funds, some Hong Kong dollars, and also stablecoin, and also others structured product as well. So let's see how it goes in this year coming ahead. So thank you very much for Cyberport, our panelists from like Autonomous, VDX, and also KNL Gaze. And thank you everyone coming over here today. And there are some F&B over at the back end, so let's enjoy. And if you may have some question to our panelists, please come, feel free. Yeah, thank you.
Thank you very much.